What's up guys, and welcome to Wall Street Millennial. On this channel, we spend a lot of time going over greatest trades and other interesting posts on the Wall Street Bets forum. Wall Street Bets users use specific jargon that may be difficult for the casual viewer to understand. So in this video, we're going to go over some of the most commonly used Wall Street Bets phrases and translate them into plain English. We made a list with the 11 most commonly used terms and we'll go through their meaning one by one with examples. All that we ask in return is that you smash the like button for the YouTube algorithm. First off, we have degenerate and autist, which pretty much have the same meaning. The idea behind calling a Wall Street Bets user a degenerate is that many of them YOLO their entire life savings into speculative options plays with little regard for the potential downside. The title of degenerate is supposed to contrast against a boomer investor who consults with financial advisors to make calculated investment decisions designed to preserve their retirement fund. Autist is used in a similar manner, but is more often used when describing someone who just incurred a big loss on an investment that in hindsight probably was unwise. Next, we have the term FD, which stands for It's Delayed. An FD is an investment in an at-the-money or out-of-the-money option that is very close to expiry, typically less than a week away. As an option approaches expiry, theta decreases the time value of the option and is not worth very much. Because the cost basis for such an option is so low, it massively amplifies the movements in the underlying stock price on a percentage basis. Buying an FD is a YOLO strategy because you have the potential to multiply your investment many times if the stock moves favorably, but you can also lose your entire investment if the stock doesn't move favorably over the course of just a few days. This is an example of an FD on Apple. The Wall Street Bets user YOLO'd his entire portfolio value into Apple 134 strike calls expiring on December 24th. Apple stock closed at $132 on that date, just barely below his strike price, so he lost his entire $10,000 investment. But you can see from the chart, when you're very close to expiry, theta starts eating away at your position very quickly, and the value of the call can tank rapidly in a few days leading up to expiry. Of course, the flip side is that if the stock does move favorably, you can make a massive one-day gain, such as this Wall Street Bets user, who made a 425% one-day gain on a Tesla FD last September. Next off, we have diamond and paper hands. Diamond hands refers to a trader who takes a long-term view on a stock. If the stock quickly spikes, he doesn't sell to lock in his profits, and if the stock tanks, he doesn't sell to lock in the loss. Diamond hands was commonly used by Wall Street Bets users during the GameStop short squeeze. The idea was that if all retail investors had diamond hands and didn't sell, the stock could be pushed to an arbitrarily high level as short sellers were forced to buy the stock to cover their shorts. This is exactly what happened, and as you can see here, at the peak of the short squeeze, volume declined substantially because many GameStop shareholders practiced diamond hands and refused to sell. However, you can't have diamond hands forever, because eventually you have to cash out your gains to spend it on frivolous consumption. The opposite of diamond hands is paper hands. Paper hands refers to a skittish trader who lacks conviction and will sell out of position at a drop of a hat, often missing out on significant gains as the stock rebounds right after they sell. One of the most high-profile examples of paper hands comes from the billionaire investor Warren Buffett. In April, at the pandemic lows, Buffett sold his entire $4 billion position in airline stocks including United, American, Southwest, and Delta Airlines. The airline stocks were among the most impacted by the pandemic, as people were forced to stay at home and air travel grinded to a halt. This chart shows the daily number of passengers screened at airports by the TSA, with the blue being 2020 and the gray being 2019. As you can see, during March and April, air travel fell to near zero, but it gradually started to recover throughout the year as travel restrictions were lifted. More recently, with the rollout of the vaccines, there's tremendous optimism that air travel can have a strong recovery in 2021. Buffett sold his entire stake at the lows and locked in billions of dollars of losses. But after he sold, airline stocks rebounded significantly and have actually massively outperformed the broader market, with American Airlines increasing 86% since the April lows. By having paper hands, Buffett missed out on one of the greatest trades of the recovery. Next off, we have the term tendies, which refers to gains that a trader has made on an investment. It's unclear how this term came to be, but it might have something to do with the fact that many Wall Street Bets users enjoy eating chicken tenders. One example of how the term tendies is used is this Wall Street Bets user who made some tendies trading GameStop during the short squeeze, and used some of the profits to buy Nintendo Switches from GameStop, which he donated to a local children's hospital. His heroic act of generosity was highlighted in the local news and served not only to bring a smile to the children's faces, but also to bring glory to Wall Street Bets. This is a heartwarming story that displays not only the power but also the high moral standards of the Wall Street Bets community. Next off, we have BTFD, or buy the effing dip. A trader will say BTFD if he has high conviction on a stock and views falls in the share price as buying opportunities to lower his cost basis and gain even more exposure. For example, this Wall Street Bets user is a long-term bull on Tesla stock and sees positive catalysts from the Biden administration, the new Gigafactory in Berlin, and the Cybertruck. Because of the long-term tailwinds behind Tesla, he views any pullback in share price as a buying opportunity and recommends buying the dip. Next off, we have DD, which is short for due diligence. Due diligence is the investigation of a potential investment opportunity, usually a stock. While you don't need to do DD to make an investment, it is generally recommended so you know what you're getting into when you make the investment. There is a DD section on Wall Street Bets specifically made for posting the fundamental and technical analysis of stocks. For example, this DD post goes through the fundamental business developments of casino operator Las Vegas Sands, covering everything including the business model, geographical exposure, and financials. These are all things that are important to understand if you want to invest in Las Vegas Sands stock. There are also DD posts that focus on technical analysis. For example, this DD post analyzed the technical drivers of GameStop stock, including options volume and ETF rebalancing. With the rise of the internet, the barriers to performing DD on a stock have decreased significantly. In the past, it was thought that only experienced Wall Street professionals have the resources to fully understand the fundamental drivers of a company. But now, any individual investor can go to a company's investor relations page and analyze their financial statements and read freely available news articles about new developments in technology that are relevant to identifying high-growth companies with a lot of potential. With the Wall Street Bets DD page, individual investors can also benefit by reading the research of other retail investors and use that to help them make informed investment decisions. In fact, billionaire investor Chamath Palihapitiya says that Wall Street Bets users are capable of performing fundamental analysis on the same level as hedge fund managers. Next off, we have GUH. GUH is a term used to describe an investment that went badly and resulted in a gut-wrenching loss for the trader. The word GUH refers to the infamous Wall Street Bets user Control the Narrative, who posted a live screen recording showing him lose $50,000 in just a few minutes on an Apple earnings FD. Take a look. He was so shocked by the loss he incurred that he gasped for air and let out the now infamous GUH sound. Next off, we have the phrase positions or banned. This is when a Wall Street Bets user posts a big gain or loss but doesn't disclose what stocks he bought to achieve this gain or loss. Without knowing the positions, it's not really much use to even share the post because you can't learn from their success or failure. Finally, we have the commonly used rocket ship emoji, along with the saying "to the moon." This is a common saying that most recently has been made into memes likening the stock price of GameStop to a rocket ship that will go to the moon. It is usually used to hype people up about a trade that they think will do very well in the future. Alright guys, that wraps it up for this video. If you like this content, make sure to leave a like and subscribe to the channel for future videos. Also check out our second channel, WSM Research, where we post regular update videos about high-tech growth stocks like Palantir and Huya. In the meantime, make sure you're following us on TikTok and Instagram. Thank you guys so much for watching, and we'll see you in the next video. Wall Street Millennial, signing out.